One very useful way to understand what is happening in the stock market, and also Tesla stock specifically, is to better understand the psychology of the market. Today, let's review the various stages of sentiment and psychology. For Tesla, it looks like 2021 was a year when we had euphoria. 2022 was anxiety and denial, where investors thought this might just be a short-term situation. 2023 is panic, and now guess where we are in 2024. I've got Larry Goldberg here with us, and he's going to help us walk us through the segments of psychology. He's got a different take on it than many of us do. So welcome, Larry. Thank you for joining me.
Thanks, Herbert.
Let's listen to Jeremy Lefebvre. He's got his YouTube channel called Financial Education. Let's listen to how he describes it.
Keep hoping on that, right? Now, psychology of the market, this is Tesla stock, right? 2021, there was euphoria and the complacency kind of cycle there. 2022 was obviously that anxiety, that denial cycle. People are like, oh, this is a short term and coming right back. 2023 was kind of, people were kind of frustrated, like, oh, why is this not happening, that not happening? And then 2024, I feel like 100%. If you look at what's the sentiment out there, it's depression, it's disbelief. In every rally that Tesla stock has, people are just going to say, this is a sucker's rally. That's all they're going to say. And so that's where we're at this point in time. And that's Tesla stock. And so, you guys know where I stand. I think this next several months is a huge buying opportunity if you're a long-term investor. And that will be that.
Okay. So I listened to his very good episode there. I really, really liked it. So he basically started talking about how, you got to watch Tesla stock. It's an innovation engine. You see how it basically, you and I have discussed this and shared it, where it follows a pattern where it basically is flat and then it pops because the market catch up to it, realizes what it's able to do, and then it's flat for years and then it pops. And then as he's describing exactly what's happening to us in 2024, euphoria, or 21, euphoria when the stock was at its all-time high. And then people do the opposite, right? When it's all-time high, it's euphoria, people jump in and start buying. Here we are, depression. People are very sad about this stock. They think it's dead. They're jumping out now because they can't see a near-term future for it. This is, almost the time when things flip. But curious. I know you have a very different thinking about this. Share that.
Well, to me, all of these graphs explaining the past are, fitting life to patterns is very difficult. So I don't subscribe to it. Although I think what he analyzed in terms of the past, psychology is fairly apt. You've got this disillusionment from these guys who made a whole lot of money very quickly, and now they're seeing that some of that money dissipates. I like the long-term holders who have got a very high level of confidence in the stock, in the company, in the management, in the philosophy, and in the product line, the product pipeline. That's what I like. Because to me, that's, those are the essentials of building a great company. Companies don't follow patterns. Companies follow management's direction. Companies follow management's intellectual foresight. And companies profit or lose based upon how good that foresight is. So fitting patterns to the past is an interesting intellectual exercise. Much more important to me is, what is the product roadmap for this company? What is the company's ability to execute that roadmap? What is the company's financial situation? What is its day-to-day operations look like in terms of efficiency? Those are the things I measure, and by those measures, I'm very comfortable where Tesla is. If you Sorry, go ahead.
Oh, I was going to say, now I understand, because when you first said what you were saying to me, like, you don't agree necessarily with this. Different companies have different patterns. I get that part. But I think this is true as well. So let me explain it. Because now that you tell me about how you see the company, like you look at company, you look at the product, you look at that, that's because it's you. The problem is that's not what this chart is showing is kind of like the average market participant and their emotions, and they do the opposite of what you do, basically, right? So this is what happens, when at the first, right, somebody, and when people are hearing from other people that there's this, potential. Let's start with euphoria, right? People like, oh my God, this stock, have you heard of this stock? It's skyrocketing like crazy because it's already skyrocketed so much. And then everybody gets euphoric and people start investing at that moment. They don't realize that this is a scenario where people are over, maybe at some point it gets to too much because you're at the euphoric stage. Then as it starts to fall, people get anxiety and denial, and then it keeps falling. They get panic and they angry and they're depression. My retirement money is lost. See, everyone is selling. I need to get out. This is what they're hearing, and so then they react to it. What you're saying is, well, I don't do this, and because you don't follow what people are saying. You follow the company and the product, and you're following clearly what's happening there. You know what I mean? That there's a difference between what happens in the market versus what's happening with you.
Well, you have to ask yourself, when do you buy the stock? You buy the stock when things are high, or when you're in what this analyst describes as the thrill. You buy it when there's anxiety. Where do you buy the stock? My point is that you don't know where on the cycle you are. Where are you with NVIDIA?
You don't.
I'll ask you this question. Where are you?
Sure.
Are you in the point of euphoria, or are you at the point of belief? Are you at the point of anxiety, or are you at the point
We
of...
don't know.
You don't know. You don't know. The only thing you do know is what the company's roadmap is, what its margins are, what its competitive position is, where other companies lie. You have to do the work. And when you do the work, you get a sense of the company's value versus its price. Now, if you're Gary Black and you're a portfolio manager, you have to look at 1 year down the line and the next 3 quarters, the next 3.5 quarters. What will the stock do during that period? Because that's how I'm going to be scored. And so he has a particular approach. If you look at me, I'm investing for my grandchildren. My investments are not concerned with next quarter or the quarter after or the quarter after. My investments are concerned with as long as my, the rest of my life is covered in terms of my expenses and my costs and my living expenses and my wife's, living expenses and whatever happens to us, the rest is for my grandchildren. And so I'm looking at the roadmap of the company over the next 15 to 20 years. I'm looking at the product lines. I'm looking at the management. I'm looking at a lot of factors. Those are the only things that are important to me. So if you're Gary Black, you have to be thinking about the performance over the next 3.5 quarters. And that's a very valid view. And by the way, that's how most analysts look at the stock. If you're me, you're looking at the next 5 to 20 years, 5 to 25 years. And if you're a different investor, you have a different perspective. You have a different set of requirements. Now, a lot of young people today are only interested in getting rich quick. I got news for them. They could be lucky and strike, the circumstances that occur once in a generation. 90% of those who do strike those circumstances will go on to lose most of it. Why? Because they'll be constantly looking at graphs like this and thinking, oh, I'm at this point with this stock, I'm going to buy it. So
Interesting. Yeah.
what can I tell you?
Interesting. Okay. I get you because you're right. Right. You're right that I don't know and you don't know and we're all guessing. I think that maybe NVIDIA is at the euphoria stage. Well, I actually believe personally that the AI story is just beginning and there's going to be a long way before it gets to that point. Now, of course, there's overbought and then gets over, there's that euphoria. So at some point it becomes there. But I want to ask you this question. What do you think about this Warren Buffett quote? Be fearful when others are greedy, and be greedy when others are fearful.
I
And so
live
that's
by
where.
that. I
Oh, well,
live by it.
so that's what this is, though. Don't be fearful when others are greedy. So when you're at the euphoria and you hear your hairdresser tell you, "Hey, have you heard of NVIDIA? Have you heard of Tesla when it was at its all-time high?" That's when you go, okay, maybe it's at the top. And then when you hear people, which is what we're hearing now, Tesla's the worst. Tesla's terrible. I'm going to jump ship now. Like
Well,
when you hear too much of that, right?
we heard, on our last conversation, we talked about Tom Narayan or
Tom
Dan,
Narayan,
Dan Ives said,
yeah.
He said, cab drivers are saying Tesla's a bad stock.
Yeah.
That's a better indication than this graph.
Okay.
That's the kind of indication. But to be honest, we lived through the pandemic, which was an extremely unusual set of circumstances. And stocks went through the roof because the government printed money like there was no tomorrow. They believed there was no tomorrow. I mean, they had this panic about this pandemic that it was going to kill us all and that, they had to close down the whole of society in order to survive. It turned out they were absolutely wrong. Sweden didn't close down and more people survived there than anywhere else in the world, almost. So when you get those kinds of distortions in the market, it takes a decade to work through the ramifications of that. People who made money in that time are sated on this notion that stocks can go up, double, triple, quadruple overnight. Well, stocks do up. My favorite example is always Amazon. It went up double, triple, 100 times. But you had to live through some very, very, very bad moments for a lot of years to make that 100x on Amazon. Look at Microsoft. It was a great stock back in the 80s. You're too young to remember, but in the 80s, every cab driver was talking about Microsoft. And then Microsoft became a dog. And for years was a dog. Now all of a sudden it's the darling of the market. You have to do the work. You have to look at the product. You have to look at the management. You have to look at, you have to work through the future. You have to understand the company. Without that, all the fancy graphs in the world are just going to be lines on paper.
I like it. Okay, I think I'm getting it, which is you agree with the statement, but
100%.
the difference is that you can be greedy when others are fearful, but only when you know the company so well and you know that they're being
the work.
You've done the work. You know that they're being fearful at this company because they're hearing everybody say Tesla is terrible this year. But then you and I are looking at it going, okay, I can understand that maybe earnings per share is depressed because margins are down. But if you look at the product and the business and the strategy, they're killing it. Every product they release is best selling. Their margins will skyrocket once they get more software and more FSD. And FSD is like revolutionary. We're finally seeing 12.3. We're seeing the birth of robots. We're seeing their leadership in AI going to come out eventually. And then, of course, your big thing is energy. Energy is almost like one of the high probabilities that it will end up becoming larger than the auto business. So the people are looking at this in the wrong way, and they're worried about they're worried about that we might not hit 2.1 million cars this year, maybe about 10% lower than that. And so I'm going to sell a stock when version 12.3, which is going to, very highly probable it's going to solve autonomy. They're ignoring that,
So I think there's a corollary that Warren Buffett left out of his statement.
Mm.
I think what he should have said is be fearful when others are greedy and be greedy when others are fearful, when you've done your homework on the company that you're greedy about or that you're fearful about.
Mm-hmm.
It's not good enough just to be greedy when others are fearful. It's not good enough just to be fearful when others are greedy. You have to be that, but then you have to do your homework before you decide upon, what to do. If you're not interested in doing the heavy lifting of looking at each company, then you can buy a market index. But when you buy a market index, be careful, because you may be buying the wrong index. You may be buying an index that has no future in the new circumstances of the market. So even the broadest statement like that needs some qualification. But other than that, I absolutely agree with what you're saying.
Yeah, and he also said he only invests in companies that he knows, that he understands. Yeah.
Like IBM. He lost his boots on IBM.
Yeah.
I mean, Warren Buffett has done incredibly well, and he's one of the most brilliant investors that has ever lived. But he's the first guy to tell you that he's made many, many, many mistakes. And we all do. Yeah. And that's one of the reasons why he is not invested in one company. He's invested in more than one company. And that's a lesson in and of itself. It's one thing to say that you really believe in Tesla and you quote all in on Tesla. I'm not all in on Tesla.
Mm-hmm. Mm-hmm.
I'm majority in Tesla. It's my biggest single exposure in the marketplace. But remember, I don't have a great deal of exposure in the marketplace.
Yeah.
So, be fearful when others are greedy, be greedy when others are fearful, but don't lose your head. Do the homework.
Yeah. Warren Buffett. Yeah. He also said this. He said that if he realized later that if he didn't sell some of the stocks that he sold, they would have still done very, very well. They would have still continued to become winners. So this idea that you can time it and go, oh, I think we're at this point, I better, follow your graph that you said earlier. And at the end of the day, all I can tell you is that, do I think this company will succeed or not? And I have a probability of that. And I think that, are they going to disrupt the market? I have a probability of that. And that's what you're making your bet on. So, okay. Thank you so much, Larry. This is great. Good advice. Appreciate it. I'm glad to get your thoughts on the psychology of the market, because we really are at that point where people are feeling very depressed right now. And we need to understand,
Well, I'm feeling pretty good about my investment in Tesla, I have to say.
That's good.
I'm going to invest further.
Okay. Thank you so much, Larry. Follow him on X, Tesla Larry. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.